Hi, this is Cary Artac with Wicked Stocks and Artac Advisory, bringing you an update in the U.S. dollar. The U.S. dollar index is used in this respect. This is a monthly chart of the U.S. dollar index. This is really an update on an ongoing study of the U.S. dollar I put out, once a month, once every couple of months, have been now for the last few years. And so what do we have here? Let me go through this. We've got this is the 2008 low. So remember, this is a monthly bar chart that spans some, not quite 20 years, but 18 years anyway. And it was back in January that we settled for the first time below this 18-year channel bottom that had held roughly for the 6 months prior to that. And we had the big collapse back in from the January 25, about a 10% break in the dollar, consolidation, sell signal long term in January. Now we're in March and pushing back above this structure. So have we neutralized the sell signal? Not just yet. I mean, you could make the case that the sell signal is neutralized temporarily, but we're not out of the woods yet. And in fact, in terms of complete momentum reversal, in terms of anticipating higher trade into later year, that comes into play. And I'm going to zoom into the same chart and show a descending channel top. So there's your 18-year channel bottom, once again, 98.51. But for the entire month of March, we have a descending channel top, 99.84. And it's an important pivot point. I mean, if we can close above 99.84, and yes, that's like 3 weeks from now, so there's a lot of time for that to play out. There's also a lot of time for the market to ease back and settle the month of March below this 18-year channel bottom, which will maintain I guess I would call it structural integrity of this long-term sell signal. This sell signal that played out in January anticipated over the next full year or sooner another 10% break in the U.S. dollar or the U.S. dollar index. And so the U.S. dollar index is really just the relationship of the U.S. dollar against a basket of some of our larger trading partners, excluding Mexico and China. It was created, the index, back in the early 70s when Mexico and China were not substantial trade partners of ours. So that is one of the weaknesses of the U.S. dollar index, but it is still a widely followed barometer of U.S. dollar strength and or weakness. So here we are, long-term sell signal that has not been fully rejected yet. If we ease back in March, at the end of March, and close below 98.51, still anticipating the upper 80s over the next full year or sooner, another 10% break in the dollar. Inversely, if we can close above this 99.84 at the end of March, 3 weeks from now, then I'm expecting, over the next full year or sooner. Now, this was 3 or 4 month collapse, and it has a history of doing that at times. And so this could be a rapid ascent. This could be sort of an explosive rally, potentially, by the end of the year or sooner, into the 108.29 to 109.14 area. This would coincide, right now, this is coinciding with two things: a flight to quality with the Iran war that's occurring in the last week or so, and you also have the Fed sort of whispering, so to speak, that it's not so inclined to lower rates anytime soon. So that had been kind of baked into the market. And when the U.S. Interest rates are higher, you generally have a higher U.S. dollar. Because you've got more, foreign entities, foreign governments, investors flocking to U.S. dollar-denominated assets. So anyway, enough of that. Bottom line, closing the month of March above 99.84 is really 3 buy signals. Back above that 98.51 long-term channel bottom, above the high of the low. When we put that low out in January, and that's the lowest this market has been for a few years, if we close above that high of 99.49 at the end of March, and if we close, I think most importantly, is above 99.84. And then we've got a clear buy signal that should result in continued gains as we move through the rest of the year in the U.S. dollar. Until then, we can fall away from here. And once again, if we do happen to fall away and close the month of March below 98.51, we still maintain a long-term sell signal that does, over the next full year or sooner, likely yield the upper 80s in the index. I think that pretty much wraps it up. I'm going to leave it at that for this particular update in the U.S. dollar index. You have a great day.